Welcome back to Indianomics. We have been speaking with two professors from the place where Mr. Narendra Modi has given us a 10-year administrative track record, from the city of Ahmedabad and from the best possible institution that can examine his management techniques, the IIM-A. Professors Ravindra Dholakia and Professor Ram Mohan are my guests today. Professor Dholakia, one expectation of India Inc. is that some of the money to tackle to meet the subsidy bill would be found through divestment, especially low-hanging fruits like probably Hindustan Zinc or Balco. Do you think that one can expect speedy results in divestment from Narendra Modi?
Again, you know, it is too ambitious to expect immediate action on this kind of issues, which are highly controversial, not only in terms of the political philosophy, but also in terms of its implementation and the possibilities of all sorts of allegations, etc. So, you know, one doesn't expect a miracle.
Yes.
Mr. Narendra Modi is really looking at the whole thing from the point of view of he's considering this entire public sector as some sort of the silver of the family. That is not an issue.
Yes.
But the point is very clear that he doesn't want that this kind of the public sector unit should impose any drag on the resources. So basically his point has been that as far as possible, the public sector units, if they have to be performing, they should start performing very quickly. And that is where the management restructuring of the enterprises, I mean, you know, giving autonomy, asking for the accountability, asking for the performance, all these things come in the picture. He is not opposed to privatization. He is not opposed to privatization, but at the same time, he doesn't want to go in for privatization where the public sector undertakings are really performing a job of regulating the competition, not by control or regulation, but by participation.
Okay, well, Professor Ram Mohan, you have been on the boards of some Gujarat state-owned units. Do you think Narendra Modi will be able to spruce up, you know, the public sector banks? Because there is at least a 50,000 crore to 70,000 crore of capital being wanted in year one. I mean, it's not FY18. By FY18, they may need 3 lakh crores, but they may need 60-70,000 crores right away. Do you think he can work any magic over there to either improve their performance or to get that money by allowing a divestment below 51%?
Yeah, well, first of all, you know, just to respond to what Professor Dholakia said,
yes,
I think his broad approach will be not to privatize, you know, public sector units, but to go in for disinvestment, which will be basically a continuation of what UPA government has done. And I think he has given some useful clues about this in some recent pronouncements where he has said that the perception that PSUs are inherently inefficient has caused great damage to the functioning of PSUs. He has said that. And Mr. Chaudhary has also given us some indication. He has said that he doesn't believe that privatization will be high on Mr. Modi's agenda. So I would say that, you know, his strength and Gujarat's strength has been successful working of public sector enterprises, and he will bring these capabilities to bear on the working of public sector banks.
Okay.
And I'm reasonably hopeful that he will work towards improving the governance of public sector banks. And if one is to go by what he has accomplished in state enterprises in Gujarat, then one of the first things he will do is to reduce political interference.
Okay.
One of the reasons why over the last 10-12 years these 4 or 5 public sector enterprises have done well is that one of his first acts on becoming chief minister was to get the politicians out of these boards and bring in professionals.
Yeah,
and incidentally, that's how I got into one of these boards.
If it's a question of finding the money to bridge the fiscal deficit, do you think he can make these public enterprises pay anything to bridge the deficit within the first year?
Well, I think that's going to be a tall order, given that growth has been rather weak. So I don't know that they'll be in a position to contribute much to the exchequer. But they are not much of a drain on the exchequer as of now. And, he will certainly initiate measures to bring about improvement, which may take about, say a couple of 2 or 3 years to sort of pay off.
Okay.
But I think it's really too much to expect him to accomplish a great deal on the public sector front in the first year itself.
I take your point.
What he may focus on in the first, what he may focus on in the first year is, expediting all these projects which have been pending in the private sector and which are awaiting clearance. I think that's where he will focus.
Sorry, Professor Dholakia, you wanted to say something?
No, I just wanted to say that exactly that is the kind of a thing that, he will generate the resources required by encouraging more public-private partnership and by clearing several of the projects which are pending right now, and it gets into a very heavy toll in terms of the underutilization of the capacity. So the argument that the growth cannot pick up is probably not a correct one. Growth can pick up very fast if the approvals are in place very, very quickly. Then without really making too many negatives, he can make too many positives. And that could be a contribution.
So you expect that the tax revenues even for FY15 can be better than what have been forecast in the vote on account?
What you can, yes. Yes, I do expect, because what is expected in the vote on account is a growth rate in the range of 5.5% to 6%, whereas it can easily become 7%. I mean, that is what I expect.
You agree with that, Professor Ramon?
Well, I think the numbers in 2014-15 will be better, but not because of anything that the new government does, but because, there's a global recovery which is underway, and, the Indian economy will benefit from that. I don't think anything that the government does in the first year can dramatically change the complexion of things. But, he will get things started, and the important thing to understand is that it's not Thatcherite. It's not Thatcherite economics or Reaganomics or anything of that kind. And mostly, it'll be very substantially, it'll be a continuation of the present model, but with better delivery and better governance.
Well, we have to end this discussion on that note, at least because we are running out of time. Professor Dholakia believes that growth can be better than what the vote on account has estimated, but Professor Ramohan believes that it will take longer than just 9 months to generate higher tax revenues, unless, of course, the global economy obliges. So it's possible that the stock markets could be still in a state of exuberance, given if Mr. Modi generates the right kind of policies, but the bond markets may be saddled with a higher than expected market borrowing. So negative for bond markets in the first year of a possible Narendra Modi regime, but positive for stock markets. That's the key takeaway from our discussion today. Thanks for watching this edition of Economics.